What's happening, y'all? Just like every swing trade Sunday, I'm gonna get into some swing trade setup plays. But in this video, I'm gonna also give you the short term direction I think the market is gonna go in, the long term direction the market is gonna go in, my favorite stock picks. And I'm gonna even pick a stock to give you levels to trade from for next week. So this is gonna be like a real, you know what I'm saying? Almost like masterclass on top of giving you the plays, right? So first, I'm gonna start it off how I always started off, and we're gonna start it off with the fear and greed index. All right, so the fear and greed index is showing us that the market is fearful. And the term is when the market's fearful, you want to be greedy, and you want to be greedy when the market's fearful. So, according to the fear and greed index, there's a lot of fear in the market. From a week ago, there's a little bit less fear in the market, which means last week the market has went up a little bit, right? But that's not a real indicator or anything. That's just letting you know how people are feeling, and the market is full of buyers and sellers, so you got to take how people are feeling about the markets into consideration, right? So we got the fear and greed index. So what I'm gonna look at first is some economical reports and some economical news, right? So where I like to go for news to also get the sentiment and the temperature of like how the market's feeling, I go to Bloomberg. And I don't really go in and read no articles. I just like kind of skim, right? And I just look, what are the articles posting? So the fear and greed index says that we're fearful. So people are scared, right? Look like they got a reason to be scared. When they go and read the newspaper or Bloomberg post stuff, stocks, stumbling stocks, market raises, a dot-com era reckoning. You know what I'm saying? Now, if y'all remember the dot-com bubble, when a lot of internet stocks came out or whatever, it inflated prices up really high and caused a crash, right? So if you look in the news, they're talking about markets being in a bubble and crashing. You also got a lot of wars going on, and wars are really costly. You know what I'm saying? How can survive the Putin war. You know what I'm saying? They're talking about 5 years since COVID. So if you look at the headlines are all like, you know what I'm saying? It's all bad in the headlines, right? So the bad headlines is gonna cause additional fear in the market, right? So we're fearful and the headlines are causing fear. All right. So now we're gonna pull up some charts just to get more of a, well, before I pull up the charts, let me see what what the economical calendar was looking like. So we what today is the 23rd. So this week there was some reports. Let me fast forward. All right, so this week we had some reports. Now, what's going on in the economy is really important to know which direction the stock market is going, right? You got to understand. So on Wednesday, the Fed did not cut interest rates. If you look, hold on, let me go ahead and pull this up for y'all real quick. So the Fed did not cut rates on Wednesday. They kept it at 4.5. It was forecasted to be 4.5 and it stayed at 4.5. Chairman Powell, he ain't trying to just cut interest rates when he feel like Trump out here crazy. So he trying to hold interest rates steady. So we have no interest rate cut on this recent report. Let's look at some more stuff. Let's look at let's see. So the next day we got unemployment claims. Unemployment claims was forecasted to be higher and it was actually lower. So the unemployment claims were lower than forecasted, um, but higher than they previously was. So the unemployment claims was 221,000, and now it's 223,000, which means that is less than forecast, but there are more people unemployed. So when there's more people unemployed, there's more people getting food stamps, right? There's more people getting, government assistance. But on top of that, there's less money circulating in the economy, right? So the news is fearful, and we have more unemployment than we previously had. Let's see. What did they say on CPI? When was CPI? Uh, uh, uh. I mean, I ain't gonna bore y'all with all this, but we have higher unemployment. There's fear in the market, and the articles are also showing fear. Okay, so let's look at VTI. Let's look at the total stock market index, and let's see what VTI is talking about. So you got to build out a case for, what I mean, why you want to swing trade in the direction that you want to, which way you expect the economy to go. Like, you know what I'm saying? It all leads up. It all gives you a big picture, right? So if we go to VTI, total stock market index, and we look at the daily time frame, it looks like we've been moving up, right? Now the overall trend is down, and the trend is your friend. It's okay to trade against the trend, but you want to keep in mind, you know what I mean? You don't want to do too much long of a swing trade. Now, according to these indicators, my MACD indicators, both of them are turning upward in green. You know what I'm saying? So, as far as the total stock market, some short term we might have some short-term upward momentum. As you can see, last week the stock market started to go up a little bit. Um, but if we go over to the monthly time frame, those MACDs are turning red, right? And the RSI crossed over, right? So if we go back to when the last time the RSI crossed over, now this is the monthly time frame, so this is giving you long-term trajectory. So the RSI right here, where this purple and yellow line is crossing, when that purple line crossed below that yellow line, the market came all the way down to this moving average right here, right? So we have the MACD crossing. You know what I'm saying? So as you can see, I'm working through the case. I see that there's fear in the market. I see that we have less employment. The indicators are showing that we're going down. So for the overall trend, the market is going down. But last week, make sure y'all can see what I'm seeing. But last week we did have last week we did have a little change in momentum. So if you look at the hour time frame, you can see that we started to staircase upwards, right? We started to staircase upwards. If you go to the daily, that's where I showed y'all before. The indicators are turning green a little bit, and we're staircasing upwards. So according to the charts, according to the indicators, it looks like the stock market is going upward. But the economy and the news is showing us something different. So I feel like we got some good potential swing trade plays going in the upward direction. I do have one for the downward direction for next week too. And I'm gonna give y'all, like I told y'all before, I'm gonna give y'all some of my favorite stocks, some stuff to put in your portfolio while we got all this turbulence, you know what I'm saying, in the economy. But let me also pull up some other indicators that give me confirmation. So the US dollar is not, you know what I'm saying, a perfect indicator, but the US dollar is the world reserve currency, right? And US dollar is, I guess, considered like a safe haven, kind of like gold, right? So I look at the US dollar to kind of give me information as far as which direction the market is or the market should be going. So the US dollar on a daily time frame, we got this double bottom candle, right? And sometimes, don't get me wrong, sometimes the US dollar can move in the same direction as the stock market. So you got to take that with a grain of salt. But the US dollar is creating a double bottom. So let me pull up the double bottom. Let me pull up the double bottom pattern. As y'all can see, I'm building out my case for my trading week, where I think the market is going to go. So not only just for my trading, but also for my long-term investment, it gives me an idea of like, okay, stocks are going to start to go up, so I should start buying from here and all of that. But um if you look, let me pull up the double bottom. So you read candle charts from left to right. So if you look all the way to the right, you got that W. Now let's go to the example, the double bottom pattern. Boom. A technical analysis chart pattern that's described a change in trend and momentum reversal from prior leading price action, right? And it has to break that neckline of the W in order to be a confirmed double bottom, right? So if we go back to the chart, the US dollar is not a confirmed double bottom yet. So according to the US dollar looks like it's going to go up, which also means that the stock market um, should go down. But the US dollar is not an end all be all. So I'm going to go to some other indicators. I also look at the 10-year US Treasury. And the reason why I look at that is because government bonds are more stable of an asset, right? So when government bond prices are going up, stocks are going down. So let me make sure y'all can see this. All right, so bonds. See, bonds are like a safe haven. So I look at bonds, gold, to see if bonds and gold and the US dollar is kind of all moving in the same direction, you know, it's confirmation that the stock market should be moving in the opposite direction, right? So the US government bonds, according to the indicators, they're going up, but uh, there's no real telling. Over a longer term, they're going up. Over a shorter term, it looks like they've been going down. Um, Now, if we pull out the monthly chart, they've been going up for months. So the US Treasury note ain't telling me too much, but my most favorite inverse indicator, I go over this every swing trade Sunday, is the VIX, right? And the VIX is the volatility index. So the volatility index is inverse from the stock market. So if the stock market is going up, then if the VIX is going down, the stock market is going up, and vice versa. So if we go to the daily time frame, as you can see, whenever the VIX does these spikes, that's when the stock market, you know, tends to do a nice run up after. So we've recently been experiencing this run up from the recent VIX spike. So based on the VIX, it's trending downwards, which means the stock market could be going in an upward direction. Now, if you look at the longer time frame, according to the indicators, the VIX should be going up, right? So if we look at VTI, the total stock market index, like I said earlier, it looked like we got like a little staircase upwards. If we go to the daily, the indicators are green. So the stock market is giving me short term. I do feel like the stock market is gonna go down. Um, Analysts are predicting a very slow year this year. We might not even get 12% in the stock market this year. So what that means is you got to position your portfolios correctly. So after I give you the plays, I'm gonna give you some of my favorite stocks and tricks on how to minimize the downturn in your portfolio. And on top of that, I'm also give you some of my favorite stocks for when the stock market flips around and you could, profit good from these stocks that's gonna run up like crazy. You know what I'm saying? So let me get into the plays. And I never do a swing trade. I never do swing trade recommendations for the downside, but this week I got a potential downward swing trade play. Um, so let me get into my least favorite. Um, I'm not in love with this one too much, but I got lows on here. All right. Now this one, I'm gonna tell y'all why I don't like it all that much. There's not too much really indicating that lows should, you know what I'm saying? Outside of okay, we do have the hammer candle at the bottom of a downtrend, and it looks like it's kind of hitting a it looked like it's kind of hitting a level of support right here. But it also looked like it's forming a inverse head and shoulders. Now I see why I liked it a little bit. So remember, you want multiple things to line up to why you want to make a trade, right? You want multiple things to line up. So we had a level of support, but we also have a inverse head and shoulders, right? So let me pull this chart pattern up for y'all so y'all can see the inverse head and shoulders. So if you look all the way to the right, you got an extended drop, it goes up, a shorter drop creating the head, and then a longer drop creating the next shoulder, right? So let me go to the example for y'all. All right, so like I said, lows, we got the inverse head and shoulders, could also be considered a double bottom. But the inverse head and shoulders is not confirmed until the inverse head and shoulders is not confirmed until we break the neckline. So, in order for this to be a solid swing trade, it would have to break. It would have to break about 227.5 if you really want it to be perfect, like 228. So for lows on a swing trade on a daily time frame, that's the point that you probably want to take the trade if it passes that, because not only is it passing the neckline, but it's also going above the 20-day moving average. Now if you look going back here, the 20-day moving average is this more like gold. It's this more gold like indicator, this gold line, trending downwards. If it goes above that moving average, of course, as you can see going back, like sometimes it goes, up above it and back below it, but it usually trends either above it or below it. So If it breaks that line and goes above that 9-day moving average, we also have the MACD and the RSI crossing upwards. So I like lows for that reason. Um, so I like lows for a good potential swing trade. I actually don't like that one the least. I like that one better than the one I'm gonna show y'all now. Now this one I didn't even look at their financials. This one is strictly off of being oversold heavily. So choice one finance, right? Choice one finance, we got a hammer candle at the bottom of a downtrend. And let me pull that up. Hammer candlestick. Y'all know I ain't just gonna talk and not let you know what I'm talking about. So if you look all the way to the right, we got a candlestick at the bottom of the downtrend. On top of that, the indicator in the middle that turns red to green, it has now turned green, right? So just based off of the candle being on a downtrend and that candlestick being green, you know what I'm saying? I have and it being extremely oversold on the RSI. That is the only reason why I picked Choice One Finance. But let's pull up Yahoo Finance and look at their financials. So far it looked decent. Um, so far it looked decent, but if the money ain't right, if they ain't making money, then you know, I can't, we can't trade it. So let me see what their bank account looking like, so that way we really decide like if it's gonna be on the trade list for this week. All right, make sure y'all see the same thing I see. All right, so Choice Finance, we look at their financials. You want the company to consistently be profitable when you're doing a swing trade. Their total revenue is increasing year over year. Not too bad. Let's look at the balance sheet. Their total assets is increasing, but as well as their total liability. Their total debt increased a lot, but it decreased from last year. Look at cash flow. Operating cash flow increasing. Repayment of debt. Free cash flow increasing. I mean, to be honest, I'm not in love with their financials, but I would consider their financials decent enough for a possible swing trade. So that's the one I like the least. And I got two potential swing trade plays for y'all before I give y'all my favorite stocks and how to position your portfolio for this up and coming year of craziness. All right, so we're gonna go into the next stock. Um, I liked Coca-Cola. Now we already know Coca-Cola making money. We don't really got to look at their financials. All right, so Coca-Cola, I like them strictly off of it giving me bull flag vibes, to be real. It giving me bull flag vibes and the MACD looking like that it's about to cross. So Coca-Cola, honestly, might be my second least favorite. We are trending upwards, and then if you look at the weekly time frame, I know I show y'all charts mostly on a daily time frame, but if you look at the weekly time frame, we have a cup and handle pattern, right? So the weekly time frame is more of a longer term time frame, right? So let me switch so y'all can see an example. Remember, look all the way to the right when I'm giving y'all an example of something. On a weekly time frame, we have a cup and handle pattern. So you see that? It is a cup motion. The cup don't got to be perfect. There could be zigzags in the cup or whatever. And then the handle part comes down a little bit before going up. You do want it to break the neckline of the cup before entering into the trade, right? So with financials, with patterns, with economical economical information and looking at different different parts of the market, looking at the VIX, looking at gold. You know what I'm saying? You can get an idea of which direction the market is going to go, and then you swing trade or trade in that direction. I do feel like for the next couple days or so, the market should be going up, but overall, the market is going to be going down. Um, so now I'm gonna give y'all my swing trade for the downside. My first time doing that on this show. I'm gonna give y'all a swing trade to the downside, and then I'm gonna give y'all my favorite swing trade setup for the whole week. Um, so Lockheed Martin, and I would to be real, I was looking at Lockheed Martin. Um, I was looking at Lockheed Martin. Let me pull it up. I was looking at Lockheed Martin because I knew it was a lot of war going on. So Lockheed Martin was like running up. But if you look at the indicators, the MACD is crossing over, the RSI crossed over the orange line, and we have a large bearish engulfing, right? If this red candle all the way over to the right is engulfing the last like 1, 2, 3, 4, 5, 6, 7, 8. It's engulfing like 8 days of price, right? So let me pull up the bearish engulfing so y'all could get an image of that. And like I said, the bearish engulfing now it's not the most ideal bearish engulfing because bearish engulfing is usually a pattern reversal. You know what I'm saying? So when you're looking at a candle, it also has to have a perfect setup. You know what I'm saying? It has to be positioned in a certain area of the chart or the trading day or whatever. So it is a bearish engulfing, but it's more towards the bottom of a downtrend. So one, I don't like swing trading in the downward direction, but also it's not in the best. It's a bearish engulfing, but it's not a bearish engulfing in the setting that it needs to be. So it was more something for educational purposes and something to also consider. Last but not least, I'm gonna pull up my favorite trading setup. Let me share this back up with y'all. So I'm gonna pull up the fake setup. My bad. Laptop about to die on me. But I got enough time. I got enough time. So my favorite setup is Apple. I like Apple. All right. So Apple, let me make sure y'all can see what I can see. All right. So I like Apple. If you look on a daily time frame, we have the bullish engulfing. So just like Lockheed Martin had the bearish engulfing, Apple has the bullish engulfing. Bullish engulfing the last about same 5 days of price, but it's also above the 9-day moving average, right? So we got the bullish engulfing ending above the 9-day moving average. We got the RSI crossing over the purple line down here on my indicator. That I'm making larger and smaller right here. It's crossing. Usually, when it crosses, that means a change of direction. Just like back over here, you see where the purple line crossed above the yellow and it changed the direction. It's now crossing back above the yellow line, changing the direction. Same thing for the MACD. When this line turns from green to red, as it is now, it's changing direction. So you got the indicators showing that we're changing direction. You got the candlestick being a bullish engulfing, and then it's closed above the 9-day moving average. I like it. So if we look at the 4 hour, let me make sure y'all can see what we're looking at. All right. So if you look at the 4 hour time frame, the 4 hour time frame is giving me double bottom. It's looking like a double bottom, and the indicators are also confirming that upward motion, right? We go to the 1 hour time frame. The indicators are all green, and we have somewhat of a staircase, we have like a trend forming. We have like a trend forming on the whoa. We have like a trend forming on the we have a trend forming, a trend going upwards, right? On the 1 hour time frame. So the 1 hour time frame is actually the time frame that I look at for trading. So it's all the way up here at the top of the Bollinger Band. So if the stock gaps up in the morning, and this, so Apple looks like my favorite setup, but this is how I will approach it. If the stock gaps up in the morning, I'm waiting for it to come down to a strong level of support, and then I'm getting in the swing trade from there. If it gaps down in the morning, then I'll probably wait for it to go either above a level of support and retest it, or down to a level of, above a level of resistance and retest it, turning it into support, or down to a level of support, from bouncing from support. So either way it goes, I'm buying it at a level of support, but I don't want to buy it if it gaps up in the morning. I want it to come down a little bit first. So y'all got my plays, man. Apple, Coca-Cola, and Lowe's. Most likely I'm gonna um record the swing trade play, just to give y'all an example of what I be talking about every Sunday. Is y'all probably just looking at candlesticks and all of that, but I ain't showing y'all no money. So I'm gonna do one of these swing trade plays, show y'all the profit next week, and then also show y'all, what I was talking about this entire time. So we got the general idea of the market. The market is overall on a downtrend, but we do have some short-term motion upwards. So when the market is on a downtrend, what do you want to do? How do you want to position your portfolio? One thing you want to do, you definitely want to load up on cash. You want to load up on cash because as the market is going down, you keep buying on the way down. You don't want to buy assets as they're going up on the way up. You want to buy assets on their way down. And usually when bad economical stuff like what's going on happens, there's usually new innovation and new stuff coming out on the other side. So whatever whatever is entailed in the quantum computing is probably going to take a large leap after these markets are going down. So whether it's the real estate or the materials, or if there's a company that's just leading the way in quantum computing, those are things you kind of want to look into on the next market cycle going up. But while the market is going down, there are investments that you could do to hedge inflation, right? So I'm gonna get into the first asset that you could do to hedge inflation. That because you got assets that's going up while the stock market is going down, and vice versa. So gold, gold is a hedge against inflation. So if we have inflation, if inflation keeps going crazy, so is gold. Look at gold price, man. Look at this thing. Gold, gold has been running. Gold is a hedge. So when asset prices are going down, gold is going up, right? So GLD, that's a ETF for gold. You know, uh, gold assets, companies that hold a lot of gold, make gold, whatever. It's basically owning like bars of gold, right? So if we look at GLD year to date, GLD year to date is up $34, which is 14%. Now, if you look at VOO, the S&P 500 is down year to date $3.90 3.93%. So the stock market is down 4% year to date, but gold is up 14%. So gold is a hedge against inflation. When the market goes down, then you want to invest in gold. Another thing you could do to diversify, remember we went over the 10-year treasury note. Now, the 10-year treasury note is a really slow and more stable. I think when we looked at it earlier, I think it was at like 4.7. So when you're looking at government bonds and stuff like that, it's a consistent, you know, anywhere from 4.7 to 3 point something or whatever. It's a slower return, but it's a greater return than the negative that the stock market has gained. So you can pull your money out of certain assets and put them into bonds or US treasury notes or something like that to get a consistent return instead of the downturn that the market is getting. So you can get bonds. I don't like bonds a lot. I do have some in my 401k just to make sure that my 401k stays stable. But as you see, you can invest in gold. Another thing that's probably doing good right now, the world needs it, the world revolves around it. It's not doing as good as gold, but you want to invest in oil, which is XLE, the ETF for oil companies, whether it's gas, oil producers, whatever. And that one looks like it's going up as well. So if you look at um, XLE year to date, which is oil, XLE year to date is up 7.28%. So gold and gas is up higher than the stock market, right? This is how you make money even when the stock market is going down. You have to balance your portfolio. So you need these things in your portfolio, but you also want to tuck some cash aside as your main assets, your Apple, your Amazon, your Nvidia, as these assets that run up like crazy are going down on a discount. You got to be ready to go shopping, right? So to hedge inflation, you need bonds or gold or oil. Um, let's look at Um, and I don't know why I can't remember healthcare ETF, but let me just do a healthcare stock and let's see how that one's doing. HCA is one of my favorite healthcare stocks. Let me see how HCA is doing year to date. HCA year to date is up 8.5%. The stock market is down. So if you want to hedge against inflation, you want to get and this is HCA. This is a company that I was just talking about, and this is healthcare. So if you want to hedge against inflation, you need healthcare. You need you need healthcare. You need gold. You need energy. You know what I'm saying? You or bonds, whatever the case is. But also the U.S. dollar moves in a different direction than the stock market in most cases. So if you also hold cash, you know what I mean, you hold cash, you get a stable, small 3-4% on your cash that you're holding, so that way when these stocks get real cheap, you know what I'm saying, you could load up. um, so there's always a bull market somewhere. And if you invest your money like this, you know what I mean? Of course, the largest part of your portfolio has to be your runner. Nvidia, your Amazon, your Apple, that has to be your largest portfolio because over a longer course of time, they outbeat anything. You know what I'm saying? So um, let me pull that up for you in context. So if we look at, let's say, Meta, Facebook, right? Facebook is a hyper growth stock. So if we look at Facebook from, let's say, if we look at Facebook from 2023, January 2023, Facebook was 100, around 135, $140, right? That's 2023. 2 years later, Facebook is up $591, 596. So your hyper growth stocks are always going to outperform. My bad. I wasn't showing y'all what I was talking about. Look at this. This is a daily time frame. We go back to 2023. Facebook was priced in January 2023. Facebook was priced at 136. In 2 years, it is now up to 596. So your hyper growth stocks will always outperform the market over the long term, but you need downside protection. You need something in your portfolio, no matter the case, you need something green in your portfolio. So if you have Meta as your front runner, carrying your portfolio out for a long time, when Meta is crashing, you got gold, or you got energy, or you got healthcare, or you got bonds, or you sitting on cash. Whatever the case is, you got other assets to diversify. So let me get into some of my favorite investments. I'm gonna give y'all my first favorite one. Everybody should have this stock. Um, Let me pull this up for you. Palantir. Palantir in the AI space, they also have government contracts and their financials look great. Palantir is like one of the only, I think Palantir is up year to date, which most like AI or tech companies aren't. Now, if you look at this, let me make sure y'all see what I see. Look at this total revenue increasing year over year, gross profit increasing year over year. Let's see what their debt looks like. While the rest of the stock market going down, They don't got no debt. Their debt is pennies. Yeah, so Palantir really don't have that much debt. They have way more assets than liabilities, and they're continuously getting growth. You gotta love this company. I've been watching Palantir since it was down at like $50. And I've messed around and sold some of it, but I jumped right back in Palantir. I definitely have Palantir in my portfolio. So Palantir is a must-have in your portfolio. My two favorite healthcare is United Health and HCA. My favorite gas companies would be Chevron, Exxon, and Occidental Petroleum. My favorite tech companies would be Amazon, Nvidia. I said Palantir, but Amazon, Nvidia, and I'm gonna give you four: Amazon, Nvidia, Meta, and we could throw Apple in there. But I like Amazon, Nvidia, and Meta. Um, what else we got? What else we got? So those are some of my stock picks. Um, but I would definitely say Palantir is what I'm looking at the most. Palantir year to date, I've been hoping Palantir would drop like with the rest of the market, but Palantir year to date is up 19%, $15. So Palantir don't look like the market is phasing it at all. Palantir in the last 5 years has been up, what's that? $81, which is 812%. Palantir is a runner. I'm telling you, man, 19%. So if you would have just had that company making 19% year to date, and the stock market year to date is $3, is down 4%. You've been killing the market with just Palantir. Um, so I like Palantir. I really like, and these are more like real estate plays, like hidden sneak real estate plays. I really like Costco and McDonald's for real estate plays. And the reason why I like Costco and McDonald's, one, McDonald's owns all of their establishments, right? They own all of their establishments, well-known name. You know what I'm saying? Everybody knows McDonald's. All the kids are hooked on McDonald's. All the people grow up hooked on McDonald's, so they take their kids to McDonald's. Like it's placed in every person's life over, you know what I'm saying? Like it's an experience. It's like Disney World. It's like, okay, when my kids grow up, I'm gonna get them that Happy Meal. My dad took me to get the Happy Meal. I took my kid to get the Happy Meal. You know what I'm saying? So McDonald's is almost like a part of culture, but they also own all of their restaurants. So and it's low cost. You know what I'm saying? They're a recession is not going to hurt somebody from getting fast food. You know what I'm saying? So I really like McDonald's as like a, I guess like a real estate slash like stable company. I ain't look at them in a while. Let me see what McDonald's price look like. So it look like McDonald's been going up. So McDonald's is also probably a good hedge against hold on, my computer doing crazy shit. So McDonald's might be a good hedge against inflation. You got McDonald's going up. Let me see what McDonald's look like going year to date. You know what I'm saying? It's an inexpensive meal. McDonald's is up 4.9%. Where y'all at? What I did with y'all? Where the live at? Oh, I'm tripping. All right. So yeah, so McDonald's, you know what I'm saying? McDonald's outbeating the market during market downturn. So we got hold on. McDonald's beating the market during market downturn. The market is down, but McDonald's is up 5%. Excellent for your portfolio. For Costco I like because Costco has a subscription based model, right? Now Costco is down year to date just by 0.71, so it's still outbeating the market. But um those are some stocks I like, man. I like Costco, I like McDonald's, I like I love Palantir. That's my favorite on the watch list right now. But this laptop about to die, man. I'm gonna actually show y'all results to these swing trade plays if I do it, if it plays out the way that I said it would. I hope this was helpful to help you, from now on gauge which direction you want to trade, how to read the economy, but also how to invest your money over the long term. That's what this is about at the end of the day, is getting our money up and being more financially stable than we were yesterday. I'm Mike the Money Motivator, man. Y'all make sure y'all like and subscribe.